Hello, I'm Maurice, and I'll be your host for this hour's discussion about payments, brought to you by Zühlke. At Zühlke, we've been working with financial institutions to develop for decades to help them innovate and improve the efficiency and effectiveness of the services they provide to their customers, their staff, and their communities. Now, today's topic is purposefully broad, as payments covers a wide range of topics, from regulations to customer experience best practice, local and cross-border, fiat to tokens. And we've got a great set of panelists to help us cover all that ground today. Now, before the panelists introduce themselves, it would be a great time for everyone watching to log on to the Slido event linked below, or from the QR code you can see on your screen right now. From here, you can start adding your own questions and voting on your favorites for the panel to answer. To start the ball rolling, the first question we'd like to ask you to vote on is this. What type of tech did you use for your last purchase? Was it cash? Was it a card? Was it a digital wallet? Or maybe cryptocurrency? Did you use open banking? Or maybe a check? We're looking forward to seeing the results. Now, whilst we wait for them, it's a great time for us to introduce our panel. And today we have a super panel with us. I'd like to start with Hana.
Thank you, Maurice. I am Hana Rolls. I am CEO of Paynetics UK. Paynetics is an embedded finance platform and platform for embedded payments, which we will talk a lot about today. We are currently working with about 70 partners to allow them to issue cards, payment accounts, make money transfers, or accept payments. Thanks for having me.
Brilliant to have you here, Hana. And next up is Paul.
Thank you very much for having me, Maurice. I'm Paul Staples. I'm the Group Head of Embedded Banking at Clear.Bank. We were a bank founded about 8 years ago to challenge how UK financial infrastructure was created and operated. Today, we are embedded and provide the infrastructure to over 250 companies out there, regulated. And we basically enable companies to create their own financial propositions and their ecosystems to support whatever outcomes they want to achieve.
Brilliant to have you here, Paul. And the ecosystem conversation will come later, I'm sure.
Absolutely.
And next, Stefan.
Hello, I'm Stefan. I'm leading the blockchain business at Zühlke globally, and I will bring in my perspective on digital money, different forms of digital money, and digital assets.
Fantastic. And joining us remotely from Hong Kong, Alex.
Thank you, Maurice. My name is Alex Feenie, and I'm Managing Director at Chavanette Advisors. We are focused on digital transformation, regulated stablecoins, and central bank digital currency. In addition, we maintain ALP, the world's most comprehensive database on CBDCs and regulated stablecoins, and will next week launch the Galactic Grid, a technology assessment framework for banking and currency technologies. Lovely to be here.
Fantastic to have you, Alex. And the future of money will be a big part of the conversation we talk about today. Now, let's have a look at the results of our first question. So we see that 57% of our audience used card for their last purchase. And as we talk about payments today, I'm minded to talk about my first purchase, which was a comic book. And I can remember really clearly, going into the supermarket, seeing the comic book and asking my mother if I could borrow $5 Barbados to buy that comic. And I was so pleased and proud when she said, yep, there you go, here's the money. Took it to the cashier and handed over $5 and walked out of that store the happiest kid in the world with a comic book that I would just devour and read that very evening. And it's great to see that cash is still the second most used technology by our audience. But let's see what changes in the future. I mean, as we think about moving forward, we have to think about digital wallets. We have to think about how this sort of technology has proliferated through our the payments environment. So my first question to the panel, as wallets proliferate with Apple Pay, Google Pay, Venmo, are they still a tool of efficiency, or are there simply too many of them? Has their popularity made them inefficient, Hana?
I think there are, of course, too many of them, but for a good reason. They really make life easier for customers and for merchants. Merchants love the fact that they are having much higher conversion rates. It's easier to make purchase. And of course, customers or consumers love using them. It's much quicker. And so going forward, everyone is expecting these digital wallets to continue proliferating. I believe the projections for UK is something like 50% of e-commerce will be done through digital wallets of some sort. Now the question is, of course, which one? And of course, the regulators have a say in it as well. They are looking at other markets, how other markets solve this issue of chicken and egg. And they are taking inspiration from Brazil and others, where one solution put forward kind of took over the market within 4 years. So I think with the Digital Market Act going through EU now, e-regulation, and it will give access to the NFC chip of Apple devices, we will see actually far more of the bigger brands that have large bases launching their own wallets, and maybe some banks as well in selected markets clubbing together and launching their own solutions.
Wow, that's a heck of a future coming up. Paul, where do you see things going?
Well, I mean, as a bank ourselves, we don't have our own wallet. We enable others to generate and create their own wallets on our infrastructure. But I can't help remind myself of a statement I made about 5 years ago, where I think we were going to get to a point of digital wallet fatigue, where we kind of sleepwalk into having more and more digital wallets. There's a new wallet for this brand or this corporation. Let's just download it and see what benefits I get from it. And when I look at my mobile phone now, I must have about 30 different mobile wallets on there of various form. And then that takes me back to a trip I did a couple of years ago to Singapore, where just outside the airport, you're presented with the taxi queue and what payment methods they take. And it was almost like a bar chart going across on this piece of paper that was out there, of about 20 to 25 different wallets that they would accept. What did I do? I got confused. So I just got my card out and paid with my card, right? I didn't want to download something specific to the geography. I didn't want to download something specific to that company that I'm probably never going to use again, maybe a year later when I travel back to Singapore. So I think there is a moment of too many wallets. But I also think wallets, the next evolution around wallets will come from how we look to operate them within the ecosystem, which I mentioned earlier. And I think we're going to start to see wallets that have really specific tailored use cases. Be that to a corporate, be that to a geography. So we may have specific national wallets. We may have international wallets for specific kind of types of trade. Hey, even last night talking to my son, challenging him on this question. He's only 12 and maybe he has a future in this world. But he even said, why don't we have a family wallet? Why don't we have a digital wallet just for our family so we can move money across and help each other out? I think he was just hoping for a bit more pocket money.
I like the way he thinks. I mean, Stefan, we talk about digital wallets. Looking at the blockchain world, this has to be an important next step, right?
Absolutely. So I make the picture even more complex because I think there's a big misunderstanding sometimes, because crypto wallets are also digital, but actually they are completely different kinds of beasts, because they, despite the name, they don't hold any assets. They just hold a private key to move assets, because the assets in my world are living out on the blockchain and are secured by the blockchain, not inside the wallet. So this will also be very interesting if these crypto wallets come to play. If Apple or Google would go into that game, this would again be a game changer. So very, very interested in where the future will go.
And Alex, from your point of view, what about digital wallets in your world? Where do you see this all going?
Look, I think there's a clear trend that's emerged here, Maurice. In the old days, you have to remember that all merchants had to deal with a multitude of different hardware devices that were supplied by card issuers. In comparison, the proliferation of digital wallets is no issue when you consider that most are compatible with a single POS device that sits on a merchant's counter. Meanwhile, the adoption rate and usage of digital wallets continues to grow. I think in 2022, there were about 3 billion or so digital wallets in the world. And then they're projecting now in 2026 that there will be over 5.5 billion. So I think there's going to be continued and growing widespread acceptance of digital wallets. And as we see stablecoins and CBDCs come online, they'll become increasingly commonplace.
So maybe Paul's son has got to jump on the rest of the on the rest of the marketplace with having a family wallet. That might be quite cool. I want to ask a second question now to the audience using Slido. So again, please join with either the QR code or the Slido code you can see. And for the audience, where do you see the biggest drivers for change in payments? Do you see it as a regulatory driver, technology, business models, or perhaps customer needs? Actually, I'd like to ask this question to our panel as well. Hana, where do you see the biggest drivers for change in payments?
It's a tricky question because, of course, it's all four and they are interlinked, right? Technology reacts to customer needs or to the change in business models, and then regulators react to the technology and to what's happening in the market. So they are all interlinked, but I think that because we operate in regulated space, whilst technology and business models evolve and we see some gradual change, to see the proper step change in this often very fragmented space as well, I think it's the regulation. And when we look at the, PSD2, it was a huge change for the better. And of course, there was 2 years of confusion and kind of big struggle to get there, but everyone got there. All the countries in Europe got there eventually. Wow. Now we are coming to PSD3. Again, it's another step change. We are coming in UK. There is this APP fraud rule that's coming in place. Again, huge problems for the players in the industry, but I'm sure we will find solutions to address that. So I do think that regulators have this gift or power to actually install a step change. And of course, then we need the technology and the business models to evolve to achieve those target outcomes.
Alex, what do you think? Is the regulation a gift for the market?
Look, I agree with Hana that there's definitely some interlinkage here. I think, though, that the main driver is really technology maturity, which then impacts the business model and then the customer needs. I think the regulatory environment provides the guardrails, but the challenge there is that you have individual jurisdictions and their specific rules and regulations. A great example here, I'm in Hong Kong, but just up the road, and even now here in Hong Kong these days, we have Alipay and WeChat Pay, and that really was the technology leading. With the regulation and government intervention then taking place much later on. I think there are also similar examples when you think about the use of, QR code technology for payments. I think that, really accelerated recently, certainly during and post-COVID. And I think it's, well on its way to, replacing or eating into the share of NFC technology that we see used at present.
Oh, very cool. That's very interesting, and it's very interesting insight from the Asian perspective. I think our audience, if I look at the Slido poll results, our audience thinks that technology will be the biggest driver for changes in payments, and then followed by customer needs and then regulation. So that's very interesting that the audience thinks that the regulators actually are going to take a back seat here, which is interesting. Although business models at 0% is a very interesting outcome as well, because one would hope that business in some way drives things forward. Just as a reminder to everyone watching, please submit your questions on Slido, and don't forget to vote on other questions that you see coming through on the Slido platform as well as we go. So the next question to the panel is around the economics of payments. I mean, what will it mean to small and medium-sized businesses to have lower transaction fees? I mean, and what will this mean to their customers? I mean, Paul, if I could start with you on this one, where do you see the change in transaction fees and the economics of payments going in the future?
So I think the direction is down, right, on the grounds of the scale at which technology can operate at. We're finding new ways to make cross-border payments and things like that. But what is that benefit to small businesses? Well, it's kind of obvious. They have a lower cost of operation, and they could actually now operate more cross-border, which may have been prohibitive previously, and open up new markets. So all those things happen. But arguably, that's always been there because everyone's been trying to find a cost reduction in international payments. So we're at this kind of almost race to the bottom, but how far is the bottom? And how low can you go, which is economically sustainable for those who are then providing the payment technologies. Yeah. It's interesting that the business model question didn't come up as any kind of response that's driving the change, because ultimately that's what's enabling these new cost-efficient models to be adopted. But equally, when you look at cost, that was a competitor because speed wasn't there initially. So we competed on price and ways to reduce the operational cost because we couldn't get any faster. The question now is, how fast do we actually need to be? So how low do we need to go and how fast do we need to go? That's the next question. Case in point now in Europe with things like the app scams going on, there's an argument that actually we want to slow down payments to introduce friction, right? Because friction can be seen as a good thing in a way to reduce the amount of fraud. Not everything is immutable, right? So therefore, actually by slowing something down gives us a chance to think. In fact, could we end up in a situation where you pay your bank to slow down your payments to give you a second chance to think about whether that was the right payment to be making out there, right? With banks being liable for 50% of the app scam losses, banks may do that automatically to cover themselves and present the question back to the consumer. So I think the cost question is a kind of has always been around. The speed question is beginning to emerge and, in fact, could be inflecting in the opposite direction. Yeah. So I think for small businesses, all of these things need to be brought into the equation. But I'll leave you with the final point, really, is speed and cost. If I get my payments much quicker at a lower price or a lower cost to receive those payments, what about my downstream processes? Can I still dovetail that speed of payment and that low cost into my downstream processes, or do I create another headache somewhere else in my business?
Absolutely. What are the unintended side effects? What are those consequences that are coming up? That's a great way to look at it. I mean, Hana, what about you? From your point of view, you provide these payment solutions.
Yeah. I think for many merchants, of course, everyone is looking at cost. Everyone is trying to increase their profit margins, but of course, then you increase profit margins by either making more money, selling more, or also addressing your cost base. And you see the divergence in the marketplace that there are some merchants, especially in the higher profit margin space, where they don't care how much the cost of payment is. True. They are willing to accept Amex, they are willing to accept all these BNPLs and other methods just to increase that conversion rate by additional 5%. Okay. And of course, there are on the other side, very, very low margin merchants, the likes of airlines, where you have huge ticket prices and very low margins. They are actually now far more experimenting with open banking and so on. So it's a diversion or divergence of needs, and of course, horses for courses is here. I think there will be all these different payment methods taking place, and merchants will be experimenting with them, and it's fun to be in the payment space because it's many different solutions and keeps us on our toes.
Stefan, I got to ask, I mean, looking at it from a blockchain point of view, what is this going to mean?
I think with blockchain, you have completely new possibilities going to very different direction. You can actually implement payment streams so that money is constantly flowing from one account to another. So imagine how that affects your wage payment once a month or constantly getting money. So I won't even imagine what this means for a bank if someone wants to have a solution like that with all our overnight batch processing, which still happens in the background, stuff like that. So I'm a bit torn between both sides. So happy that you brought up this slowing down, like slow food. Now we have slow payments again.
I mean, in an environment where we see SEPA 2 happening in Europe, I mean, speed is a real conversation starter here, right, when it comes to payments?
Actually, I'm personally, speaking from my private experience, I'm very much annoyed when I do a SEPA transfer and the money is gone instantly, but takes 2 days to appear on another account or so. So someone is actually working with my money. So I think we need some improvement there, absolutely.
Okay. Well, we'll have to see. But I mean, the question really was around business to business. And I mean, to follow on from that, what changes will impact businesses the most? Cheaper foreign currency transactions. We see the FS market. I mean, you can imagine how FX could be affected by the changes in payments in the future. Programmatic interfaces with other businesses, as you mentioned, little and often payment, or lower cost for payment services. I mean, Stefan, what do you think? What does this mean for business?
I think it's absolutely important, and it's actually a vacuum between retail CBDC discussions and wholesale CBDC discussions that the business euro is actually missing, at least in Germany. So we've been talking to many companies in the industry who were looking for pay-per-use scenarios for their IoT solutions or something like that, machine-to-machine payments. But there is no good digital payment to be fully integrated into other business processes. So and there is no legal tender in the blockchain side. So now with MiCA arriving, this will be very interesting that stablecoins can be actually used by businesses in a regulated fashion, because we discussed with many clients about blockchain scenarios and they said, yes, but it's not a real euro, so we can't actually use it. So it will be very interesting in the next weeks and month how the whole industry will react to MiCA compliant stablecoins.
It's interesting. I mean, Hana, what's your view here? I mean, in terms of business impact for these changes?
I will agree with Stefan that, of course, the business is moving into platform to platform, pre-programmed payments and so on. It has to be fast. It has to be secure, and it has to be programmable. And I think to some extent, even though it's not crypto and coins and blockchain, but embedded finance is actually also moving, answering some of that needs, right? So the SMEs, and especially SMEs, when you look at the market, the consumers have been served rather well now with the neobanks, Monzos, Revolut, and Nubank in Brazil and so on. The corporates have always been served quite well by the big banks, but I think there is this middle market, the small and medium enterprises that have been quite left behind. And that's why the embedded finance is such a buzzword and such a big thing in the industry, because now everyone is trying to figure out how do you embed these payments, how do you embed financial services in those interfaces, and so that the SMEs can use them much more readily, quickly, and frictionlessly.
If only we had someone who was the head of embedded finance with us to answer to those. Paul, what do you think, Paul? I mean,
so look, I think we've kind of gone through the cusp of the first wave of embedded finance, which was some very plain vanilla use cases out there. And apologies for anyone who has actually operated in those use cases, but they were the first wave. So you were the groundbreakers, you were the pathway, right? We're kind of in that second wave, if not even the third wave of embedded finance, where actually it is the B2B space that's really opening up, right? And there's no better way to illustrate that other than that's where the ARPU is. The actual revenue generated per customer is much higher. In the UK, you've got a primary current account generating anything between £34 to £50 per customer annually. A business up to 50 million in turnover could be generating between £2,000 and £8,000 in banking revenues. So that's, you kind of got to follow where the opportunity is, but also following embedded finance in that sense that actually that's where the biggest problems are that can be solved. Right? The problems for us as a consumer is very much about my checkout experience. Let's be really honest, right? How do I tap into, get my travel card? How do I pay for my groceries, right? That checkout experience is largely well solved for today. But actually businesses don't have that experience. So moving embedded finance into that direction, solving for those complexities. But actually I'm starting to see, and this is some of the work that we focus on here at Clear.Bank, is actually building corporate kind of their own ecosystems of payments. And one method of payment we haven't actually talked about is the on-us payment, which is, we as a fully licensed bank, direct with the Bank of England and others hopefully soon, gives us the opportunity just to move money at the central bank. So if we've got two sides of the transaction happening, all we're doing is switching the account balance at the Bank of England. The money has not had to go through any rails. So that has positive cost implications, it has speed implications, it has security implications and settlement as well. So all of these things come into the equation that I think kind of transform where embedded finance can go. And I see corporates eventually using embedded finance in a way which is much more about their infrastructure that then has a consequence of helping their customers, as opposed to always building a brand new fancy proposition.
Yeah, and I think the ecosystem really is going to help with that, where people can look to understand, what is it that is specific to my needs, and then what are the general things that I can just plug in and build with. I think that really is where we're going to see some changes and moving forward.
And we are just on that point, we are already seeing the changes in business models today, that you can see some of these digital platforms that's set off to provide whatever digital services to their customers, to their SMEs. Now they are making 90% of their profit from providing embedded finance, either payments or cards or accounts. So all these digital platforms, and I don't want to know names, but they really are now moving. They are becoming payments first.
Yeah.
And so that will also help with this adoption.
Indeed. Very, very true. But again, we talk about, where we're going to, and you mentioned, Paul, like the ecosystem. And you mentioned also, really importantly, Clear.Bank has that ability to move things within the Bank of England. Mm-hmm. Mm-hmm. So, the next question really has to be about traditional payment rails, right? Because you're talking about, going around that. What will happen to SWIFT, RTP, ACH, all of these other things that we have going on now as the rigor, the rails that we use? How will they change to accommodate payments in the future? What will the technology... What new things do you think will be built on them, or built on what comes next?
So I'm going to kind of make a point of reference there. We're not trying to go around the payment rails. That sounds very nefarious. No, we're certainly not trying to do that. In fact, what we're trying to do is actually, because we're fully licensed, operate well within the rails.
Yes, of course.
But look, I think it's much like the European railway system and the UK railway system. When we built Eurostar, or say we collectively, the Anglo-French alliance built that, we were operating on two different railway gauges. Right?
Yes.
So how do we overcome that problem? And I see the same as in the payments industry, right? We've got all these different rails, and it's the interoperability of those rails where I think where the concentration of effort needs to be, and the innovation needs to be coming from. The orchestration of these rails as well. So when we're looking at the solutions we're building for our clients at Clear.Bank, we have to think about that, and we have to continue to innovate and offer new solutions around those rails and adding to these rails that are available out there. So interoperability, I think, is the principal part there. And it's a bit like, again, this kind of, how does the closed shop then work with that when it needs to move outside of that? And I think, Elon Musk with his Twitter future, whatever that, or X, whatever it may behold, right? There was a line written 2-3 months ago now that said he wants to turn Twitter or X into a bank, right? Or a financial system. And he said, we will have failed if anyone has to move money outside of X. That was his success criteria. Now, what does that actually mean? Well, actually, does that mean he doesn't allow interoperability with any other rails and prevents that? Once money is in, it's like the Bates Motel, no one ever leaves, right? So these are all kind of the questions we need to be thinking about as the kind of the future around these rails. I think they will exist. I don't think we need one rail. I think we need optionality, but they all need to kind of coexist. And I think we've all been hung up on this is the rail for the future rather than saying these are the rails for the future.
I think it really bears mentioning the fact that this is the backbone of our economy. These rails carry and funnel the vast majority of the revenue that we consider to be part of the economy. Stefan, I got it to yourself. What with the technology that we currently build on these rails, you've got PayPal, you've got MasterCard, Visa, etc. What will happen to that? What does the future look like?
Well, actually, all of the three you just mentioned, they are heavily investing in blockchain technology at the moment. Okay. So you can see them on all the conferences. And maybe go deep into PayPal. So I recently listened to a very interesting podcast with a guy behind the design of the PayPal stablecoin. And actually, it doesn't compete with any of the other ones we know, like Tether or USDC, because it's very much focused on payments, on transfer. So one nice story is that PayPal, I think in 2008 or 2009, bought Venmo. I don't know, you know better than me. And actually, the whole payment infrastructure of Venmo and PayPal is not compatible until now. So you can't send money from a PayPal account to a Venmo account until they introduced PayPal US dollar stablecoin. So they use the stablecoin to send money from a Venmo account to a PayPal account for internal operability. So crazy stuff. So, and what's the lesson from that story? I think we might not notice. We might not notice. It might feel completely similar. Maybe it's a bit faster. That money gets from A to B, especially cross-country, cross-border. That might be an interesting thing. Maybe less fees, but actually the user interface might be just the PayPal app like before.
And yeah, I mean, that's quite cool. I mean, Hana, where do you see these things moving?
Of course, they are all addressing different needs, but they will also learn from each other and address the pick and choose, right?
Absolutely.
So, for example, Visa, the card rails company, of course, they're not only card rails companies these days. Their strategy is to be network of networks.
Yes.
So they are known for the cards, but they've made purchases and investments in blockchain. They've made purchases and investments in open banking and other technologies in currency clouds, in Forex and so on. And it's not about keeping them separate. They are integrating them so that they provide solutions to different customers to address that particular need.
And I guess it's really at the interface boundary where those companies, the Visas, your MasterCard, really make it efficient for their clients and their customers to sort of understand how to interact with moving the money around. And I mean, that and moving things around really brings us into maybe what could be happening next around digital assets. So my next question is to Alex to start with, really. And with that is, how will digital assets coexist with fiat currency? I mean, Alex, how do you see it? How will they interact? And with this interaction, how will that interaction impact businesses and consumers?
Yeah, it's interesting, Maurice. I think whatever happens, you will need fiat currency to pay for the digital assets, regardless of whether the fiat currency is digital, so a CBDC, or otherwise. And my view is that fiat currency will stay the dominant legal medium of payment.
Fantastic. Stefan, what do you think? I mean, how will digital assets coexist? How will they impact the use of fiat?
Actually, we just published yesterday our market study about institutional DeFi. And I had the opportunity to talk to a lot of bankers regarding digital money and digital assets and how they interact and what's the value proposition of blockchains in there. And everybody, really everybody agreed that digital asset and digital money need to live close to each other.
Yeah.
So ideally, all the benefits of a blockchain is only there if you have them on the same chain, so very, very close to each other. Some banks now go even with their commercial bank money tokens onto the blockchain of the clients to have this atomic swap feature and really get rid of all the overhead you usually have in delivery versus payments. So that's one thing. And which kind of blockchain that is in the end, where the money has to live, I think it will be several ones. So here in Switzerland, you have the wholesale CBDC on a private blockchain at SDX because the assets are issued on that private chain. So the money goes there. Yeah? And in other environments, it's very different. So I think it will be very heterogeneous in the next time before it consolidates back because everybody is seeking the network effects again. Yeah. So very, very interesting times in that regard.
Very interesting indeed. I mean, I don't know, Paul or Hana, if you guys have any sort of feeling about how digital assets will interact with fiat currency.
Yeah. Well, I mean, we're in a position where Clear.Bank is building out its own stable coin. It's building out its own tokenization capabilities. This will be coming out in the near future. The question is why we, as a bank who was there to initiate provocation with UK banking infrastructure ultimately, we see it as a medium, right? Currency, coins in their first instance, whenever they were invented, God knows how many millennia ago, right, was just as a unit of transfer. And your example with PayPal and Feenie, that use of a coin in between that is just a unit of transfer. It just happens to connect these two things together. Yeah. If they'd thought about it hard enough, they probably could have done it without the stable coin. But it's become an efficient, cheap, low-cost solution, right? So it's viable. So for us, I think we do see that there is a future with stable coins. We'll be building our stable coin for the purposes of facilitating settlement with some of the ecosystems we operate in with our digital partners. We see corporates kind of investing in that kind of idea of, if we used your stable coin, how does that help us with our customers? Can we solve some of these other problems? So back to my earlier point, it's just another tool in our toolbox to solve some of these complicated use cases. There may be other ways to solve for it, right? But these experiences that we generate have to come from somewhere, and the more tools you have, the more opportunity you have to solve for these.
Indeed. I mean, have we moved that far from trading shells or salt, really? I mean, it's just different units of value that we're moving around, and it's about who sees the value in each unit.
Right. I think that's... Arguably, we're almost going backwards, back to my poor old son who's 12, right? The other day, he said to me at the chat, I asked him how did he pay for a birthday card for a friend of his, and he said, I paid cash. This is a 12-year-old child paying with cash. And I asked him, why was that? He said, because the self-service till sequence was too complicated, right? There was too many buttons and options and pop-ups and things like being presented to him. It was just easier to put the pound in the slot and be done with it. Yeah, so you kind of, there's a notion that actually, do we overcomplicate some of these things with this technology? It's amazing technology, but do we overcomplicate? So it's about relevant technology for real problems.
But maybe taking that one step further, I think me as a user of this payment system, I would like to morph it somehow. So I use one kind of money to transfer money locally in Germany maybe, but another kind of money to transfer when I donate something to Tanzania or something like that. And then if I let money lie around, if you imagine what you're doing, you transfer it to your own depot, and then you get it back because you need it. And why is that? So why can't it earn interest and morph into a kind of money market fund when it's just lying around? Why do I have to do that, actually? Why doesn't
money market
funds? Well, yeah. But why is that? So I want to earn interest as long as it lies around, and I want to have it liquid when I need it. And this could be overtaken by the system, from my perspective.
Yeah, this feels like to ask you this question, Alex. To Stefan's point, with CBDCs, what sort of facilities will we have in terms of? We know that the coexistence with with fiat currency, but what does the promise of having a central bank-backed digital currency mean for us in terms of payments and stuff?
If I may, Maurice, I'd like to start with a personal story. On my second tour of living in China that started in 2015, I never forget that there was a coffee shop down the road from my apartment in Shanghai. And in 2015, when I moved there, you could pay in cash, as you could in taxis at the time. You could also, not in taxis, but at the coffee shop, you could pay with debit cards or credit cards, whether it was locally issued or foreign issued, and you could pay with cash. By the time I left in 2018, you could no longer pay with cash, and you could no longer pay with local or foreign issued debit or credit cards. So the only way you could pay was with WeChat Pay or Alipay, which they call Zhufubao in China. So I think, I wanted to give that example, and I also want to give the example of Australia. In Australia, I travel a lot there for personal reasons, and also for business. And I would say over the last 8 years or so that I've been traveling there very frequently, I could probably count on my thumbs the number of times I've used cash. And that's for any number of different types of payments. So I think, it's interesting. Paul uses the example of his son using cash, I suppose, in the UK. I can't think really the last time I used cash in the UK, but I think there's a general tendency toward cashlessness in most places that I travel. So I just kind of wanted to give that personal anecdote. In terms of central bank digital currency and the benefits that it will provide, I think there's a lot of talk around the buzzwords like financial inclusion. I think it's one of those buzzwords that means different things to different people. I think there are geographies where CBDC will provide financial inclusion to those in remote archipelagos or parts of the country or whatnot, where the infrastructure of traditional brick and mortar banking and even in some cases cellular networks, are not in place to provide people with access to financial services. So I think there is that aspect. I think one interesting concept or framework to look at is that in Singapore with purpose-bound money or PBM, it's really a voucher, kind of a programmable voucher approach that you're seeing there, where monetary policy, for example, can be exercised or driven through the currency itself. You could use it to stimulate certain sectors, for example. So I think we're entering a very interesting period as we transition towards CBDC.
Yep, indeed. Very interesting times indeed, and a pretty sort of dynamic future, I think, ahead of us. I just want to go over to some questions we've been getting through at Slido, and thank you so much for everyone submitting their questions. Please send more through. We'll go first to Robert's question to the panel. What prevents banks and financial institutions from truly innovating in payments?
Wow.
Not for the sake of technology, but for actual customer needs. I mean, Hana, I can see you itching to answer this one.
That's a loaded one. I think anyone who has worked in a big company can think of 5 reasons why things can go slow. But let's be optimists here. Of course, every company sets out to provide amazing service and amazing environment for their employees and so on. Of course, the banks are trying to do the same. Why they are not faster? It's the legacy systems. Mm-hmm. It's again, they are operating in regulated environments where they have big departments telling them how to do business and who to do business with. And thirdly, I think it's also the investment cycles they are in. So they have shareholders expecting some returns, whereas companies like ours or the smaller companies are still, in the growth cycle where, our shareholders are looking for growth as opposed to for continuous returns. And so even in our company, we have 130 employees, and we have to be ruthless in making decisions about what we invest in. Mm-hmm. And what we have to kind of leave for the next cycle of our roadmap. We always start with the customer, right? We always look at our partners, what are their needs, then we bring them into, of course, we need to create business cases, and we need to ensure that there is a potential for that in the market. And I'm sure that the big financial institutions are doing the same. It's just that they are sometimes less able to invest as much. And they also have other constraints. So I will not be too hard on them, but please, Paul, from your experience.
Well, I think you've just described exactly why we set ourselves up. Brand new tech, in the cloud, lower cost to operate, one mission objective, right? And to enable others to weaponize what they need to do when it comes to innovation. So we are that platform to innovate on top of and challenge new business models. And our business model is built around that in its own right. So I think you touch on an interesting point there, that banks have a business model that is, I take money in and I eventually hope to lend it out at a higher rate, and effectively they're just balance sheet interest rate arbitrage business models. Our business, we don't operate like that as a bank. We operate as platform economics, so we don't do any lending, which kind of sounds weird to a lot of folks out there. When we're a bank, we don't lend any money. But actually, if you want to provide an innovation platform that enables others to be themselves customer-centric, you need to remove risk from that infrastructure. So we made a very conscious decision to remove that risk, provide infrastructure, and focus on the software. If you're a software company, you don't look at how you lend money as a software company. So we're a software company. It just so happens we've got a very robust bank license behind us. So I think that'd be my first point. I think the second point here around customer centricity is actually sometimes we do tend to forget who the customer is in our innovation and whose problem we're actually solving for. And we convince ourselves it's a customer problem, but actually it's a problem for the innovating company because they need to show something in a 12-month cycle to hit that end-of-year appraisal that they've done something productive. And it reminds me when I was advising a a company that had come up with fancy, and I'm being particularly opaque here so I don't get myself in trouble, but they had come up with a very innovative way of using fingerprint for payment. And I challenged them on all this after about 9 months worth of review and scoping and testing and spending a lot of dollars on this. I said, but if you enable the customer to pay with their fingerprint, that customer no longer comes to your other venue of purchase, which is where you make all your money. The customer has now just walked straight out. So now you're not making margin on your other part of the business line because actually you've got no incentive for them to be there.
No chewing gum anymore.
Correct, right? So you're now in a dynamic, actually, you may solve one customer problem, but you create these downstream, again, unintended consequences. So I think we have to look not just at our customer, we have to look at our impact of the solution to the customer and what that has elsewhere around the periphery. And innovation as a whole, we get budgets, we have to find a way to spend them. We look at how innovation can be part of that budget spend. I think the notion of risk is unbalanced when we look at innovation. So I think we need to look at creating some more free spirits out there with the way we do innovation. Unfortunately, I'm one of those free spirits, so I'm constantly coming up with new ideas.
If I could add one point to your answer is, or this questions about financial banks and financial institutions. I think the innovation is happening in the market. It's just there's many companies coming into the market to provide it. So there's the companies like yours. Of course, there's other digital platforms launching these accounts, cards, payment experiences that should have been provided by the banks, but they are provided by someone else. So innovation is happening. It's just about who is, I think, the focus of who is owning the customer and who is providing is changing.
I would agree. I think if you look into banks these days, into the incumbent banks, there's a lot of legacy IT. Maurice, you know better than me. Actually, having seen many industries in my 21 years for Zühlke, we are innovating across all sectors. But I think finance is really old, technology-wise. So many other industries have renovated their systems far earlier, and in banks you find systems from the 80s and 90s written in programming languages I didn't learn in the 90s when I was studying computer science. So how old do you need to be to serve these systems? So we are really about disruptive change in this world, I think, technology-wise. Either we are a Clear.Bank or we are back-end technology that I propose. So I think it's very interesting times. And you need to find the money, You need to find the money for all that. It takes a lot of investment, obviously.
But because banks are so systemically important, and you touched on it earlier about global economic consequence of banks, what if it does go down? What if the innovation changes something that you can't roll back on? I know we're supposed to have all these fail-safes in place, that's not an outcome. But I think that does inhibit some of the potential innovation out there because you've got one eye on the negative outcome. And the regulators themselves equally and responsibly have that same outlook that don't change your system X because if that goes down and you can't roll back, then the 12% of the UK population can't make payments, which we saw several years ago with a number of banks had system changes.
So, I mean, I don't want to be an apologist for our banks, but I do think that there is innovation happening in payments and across the many verticals within banks. I do think, as Stefan, as you quite rightly say, there's a lot of legacy that can sometimes feel for the banks, like that is it forces them to take a second look at how to make these innovations. But I do see in the banks that we work with a heck of a lot of really smart, very capable folks pushing the boundaries a bit more and really working within the regulations to get the best out for their customers. So what we see is people using the ecosystem of tooling and of products available being used in concert within these organizations to really help them innovate without generally touching their core stack. So I think that there is innovation happening. I would say so because some of our great partners and clients are doing this work with our support. And I think that there is some really cool stuff happening on the market. I just want to make sure that we can get to another audience question. So let me get here quickly. This one is from Sabrina. And she asks, what are the changes consumers should be looking forward to regarding payments soon? PSR, PSD3, RTGS. Hana, thoughts here? Consumers, I know.
Consumers, that's the challenge.
Yes, that was a challenge with RTGS.
I think we are all payments and tech people, and I think if you ask these acronyms to any person outside, they would not know what they are. So, but I do think that consumers, of course, look at frictionless payments and secure payments, especially in these days where the fraud is such a focus. Of course, and the third dimension is frictionless. We've addressed the point that we cannot have them all. But I do think that probably the PSD3 will move somewhat towards the frictionless and more secure payment. So I think if I was to pick one,
that would be the one.
Please feel free to disagree.
I like the fact that Sabrina's asked, looking forward to regulation. So I particularly like that part of the question. Look, I think, what can we look forward to for consumers? Regulation's there to protect the consumer. We there, as people who have to adopt that regulation, have to do it responsibly.
Yes.
But then when innovation comes on top of that, we have to enable that the regulation is always front and centre of that innovation that's out there. I quip at the point around, with banking as a service, embedded finance, embedded banking, you put it all into a petri dish, you shake it up a few times, and you kind of come out with new innovation that's great for the consumer. However, you come out sometimes with innovation that's not great for the consumer, right. And that's where these regulations are purposely built to create those, to your point earlier, guardrails that protects everybody. So I think it's not just those regulations out there, but I think we'll see more in the embedded finance space too.
Fantastic. I would like to ask the next question we have from an anonymous guest. In terms of customer centricity, what is being done about the lack of transparency in the fee structure? I'd like to sort of shift the question slightly, if I may, talking about transparency. Alex, one of the promises, I guess, of digital currency is your transparency and expectability. What do you see that changing?
I think when you think about the transparency that will come with CBDC, it's really a hotly debated topic, right, across many jurisdictions right now with regard to kind of privacy and anonymity, what the limits are, and what legs of the transactions will be visible and which ones won't. So. With CBDC, one of the more common approaches that's being taken at the moment is the hybrid approach to CBDC distribution. So from the central banks to the end users through the commercial banks, so not disintermediating the commercial banks. The question then is how much of any particular transaction would be visible to the central bank or to the regulator, and what would be visible, for example, to the commercial bank or not, and what would the limits be? So I think it would be very interesting to be a fly on the wall in a lot of those meetings that are taking place around the world. I think it will really matter what jurisdiction you're in terms of where we land with regard to privacy and anonymity of transactions when we get to retail CBDC.
Of course, yeah. I think, Paul, I'd like to come to you on this one as well. The question specifically is about transparency and free structure and privacy. But there's that balance of privacy and security, isn't there? I mean, how do you see this playing out when we talk about customer centricity, giving customers a great experience that allows them to see and understand how their money is being invested, perhaps, or what's being added on for the transaction cost, but also being confident that it's secure? I mean, how do you manage these two?
So security is at the heart of what we do. And the way that we impart that on our clients as well to make sure that they've got this kind of safety and strength in the infosec that's required to support the propositions they're building. So it has to go through the whole value chain, right? It's not just the bank that's responsible for that privacy and security. It's also those who are presenting the proposition to market, whether you're a corporate or a digital wallet that's adopting our technology, right? They are equally responsible. But ultimately, the regulation as structured today, it's incumbent on us, the license holder, the bank license holder. But I think with the fee structure associated to all of that and the transparency around this as well, banks have historically hidden behind this veil of kind of obscurity around pricing. You saw regulations in MiFID and things like that trying to improve transparency in spreads and things like that, and timestamps of pricing. For us, it's a very simple thing. It's a transaction and a platform fee. We are software after all, right? So that's kind of how it operates. Now, that proposition that built on our technology, how that gets presented to the end consumer from a brand, it's entirely down to them, how they present that and how they charge, if indeed they do charge. Because sometimes if you're solving for an efficiency gain, you might not actually even want to charge your customer for that. You may absorb that. So there's different ways to look at how fee structures are applied, adopted, constructed, all these sort of things.
Fantastic. And I think we're going to have to close it there, everyone. I mean, thanks so much for spending this time with us, this hour. The time really does fly. And I've had a great conversation. I hope you all have, and I hope everyone watching has as well. So I'd like to go around the panel, and in 1 minute or less, to add a constraint, can you let us know the one thing you think financial service organizations will need to change about payments in the next 2 years? And I'll start with Alex.
Thanks, Maurice. Look, I think a little bit earlier, Stefan was almost too kind to the commercial banks. I think the infrastructure of legacy banks is a house of cards. Core banking systems built in the 80s and 90s, cannot handle the demands of the digital age. It's like having foundations for a 3-story house, but then building a 50-story building on top of it. I think a lot of people are impressed when they see beautiful looking banking apps that retail banks provide. But these apps are only responsible for, a couple of % of the technology in the banking platform. They really are the tip of the iceberg. How do you change the architecture? Well, I think many of these banks really need to start with a blank sheet. The banks of today need a fundamentally new foundation to prepare themselves to survive the digital economy.
Brilliant. Thank you, Alex. Over to you, Stefan, quickly.
I think we saw fintechs taking away the front ends of banks, and I guess we will see new systems like wholesale CBDC or blockchain-based systems taking away the back end. So I think most banks are stuck in the middle, being a portfolio and risk manager and a payment processor for their clients. Quite a different world, because most of them will have a hard time to compete on the back end stuff of things. So that's how I see the world, because we take this legacy tech, or most of them take this legacy tech with them. It will cost an enormous amount of money to replace them, and let's see what happens.
Paul.
It's almost as if we read each other's minds in that one, and we could swear we didn't swap notes beforehand. But I agree with you with the way that banks view payments and being stuck in that kind of sandwich between the central bank and the consumer ultimately, or the client to consumer dynamic. And I think that's where infrastructure as a term is much more prevalent than the balance sheet. Right, so I think that's the first part around the future of payments is infrastructure, not balance sheet for payment facilitation. But actually, I think ultimately, this all comes down to the consumer, right? Now, how banks access that consumer to facilitate activity, I think there's a lot of thinking that's going on right now, and the future and I don't know what the future is, but I encourage more into I think it was Sabrina's question around the consumer needs to be much closer to the decision making, even though you may be one step removed from accessing the consumer.
Hana.
Has been said about, completely agree with your points. And I just would add that, of course, it's for the benefit of the consumer or the small businesses or the large businesses. The innovation is happening. There are new propositions. There's new companies going to be the financial services providers going forward. And so I think the market is working well, hopefully, and with the help of the regulation to make sure that it's all safe and secure and interoperable and all the other challenges that they are trying to address. I do think that we will be busy in the next decade launching new propositions and new service models.
Indeed. Thank you all so much. Thank you so much again to everyone who joined in, everyone who sent in questions. If we didn't get a chance to answer your question here, please reach out to us via our website or on LinkedIn to continue the conversation. Thanks so much for joining us today, and we hope to see you soon.